Ladies and gentlemen, good day and welcome to the post-result Q2FY25 earnings conference call of Railtel Corporation of India Limited. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vishal Periwal from Antique Stock Broking. Thank you, and over to you, sir.
Yeah, thanks, Sejal, and good morning, everyone. Welcome to post-result interaction with the management of Railtel. From the management team, we have with us Mr. Sanjay Kumar Ji, who is Chairman and Managing Director, Mr. V. Rama Manohar Rao Ji, Director Finance, Mr. Manoj Tandon Ji, Director Projects Operation and Maintenance, and Mr. Batra Ji, who is the Special ED and Finance. As usual, we'll have a brief overview from the management on the gone by quarter, and then we'll have lines open for Q&A. Yeah, Sanjay sir, over to you.
Thank you, Vishal Ji, and a very good morning to all and a very happy and prosperous Diwali. It gives me great pleasure to interact with you on the company's performance in the backdrop of Q2 financial results for FY25, which were declared by the company on 28th October 2024. The company declared interim dividend of ₹1 per share. The company achieved operating revenue of ₹844 crores in Q2 of FY25 as against ₹558 crores in Q1 of FY25, registering the growth QOQ growth of 51. The telecom segment contributed ₹338 crores and project segment contributed ₹506 crores in company's operating turnover. The total revenue of the company during Q2 of FY25 was ₹863 crores as compared to ₹613 crores in Q2 of FY25 with year-on-year growth of 41%. The profit before tax in Q2 of FY25 is ₹94 crores as against ₹67 crores in Q1 of FY25, registering a Q-on-Q growth of 41%. The profit after tax in Q2 of FY25 is ₹73 crores as against ₹49 crores in Q1 of FY25, registering Q-on-Q growth of 49%. Earnings per share in Q2 of FY25 stands ₹2.26 as against ₹1.52 of Q1 of FY25, registering a growth of 49%. Earnings per share in first half of FY25 stands ₹3.78 as against ₹3.32 of first half of FY24 with year-on-year growth of 14%. The company achieved total income of ₹1,440 crores in H1 of FY25 against 1,096 crores during the corresponding previous year with year-on-year growth of 31%. Profit after tax during H1 of FY25 is ₹121 crores as against ₹107 crores in the corresponding period of previous year, registering a year-on-year growth of 14%. This year marks an important milestone for us. While we are celebrating 25th year of our journey, we have proudly achieved the prestigious Navratna status, joining the elite group of PSUs. We remain committed to pursuing growth and creating value for our esteemed investors. We are also exploring new opportunities in order to realize our true potential. I thank you for your trust and collective vision for the future of this company. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Yeah, good morning, sir. Thanks
Good
for
morning, Sanjesh.
the question and happy Diwali.
Thank you.
I got few questions. First, on the order book side, where do we stand today in terms of the closing order book for the quarter ended September? And any progress on the opportunities on the railway side, both on the Kavach and LTE, which has materialized?
Yeah. So your first question is order book value. We stand at 5,254 crores today.
Okay.
When we talk of railway side orders, so we are getting success in signaling works. On Kavach side, if I speak, so we did not participated in the last station Loco Kavach tender because we had some doubts about the readiness of the product of our partner, and we are still in discussion with the partner whether his products will be ready by the time it is required. So though it is a big kitty, but we are cautious at the same time because this is a new product and it is still under testing and all those things. Therefore, we decided as a board that we should not be in hurry. That is why we have not gone into recent tenders. But there are tenders still, and we are continuously tracking and making decisions, rational decisions, to participate in these tenders.
Fair enough, sir. Fair enough. That's very clear. We also hinted that we may look at other partners in the previous call. Is that something we are pursuing along with the Quadrant partnership?
Yes, certainly. Because, see, you don't know the industry. When product is not yet approved, you have to continuously explore other opportunities also.
So that efforts is ongoing, right? But then again, we have not closed any other partner along with Quadrant as of now.
Not yet.
That's clear. Second, on the project business margin, at the EBIT level, this quarter had a 3.4% margin, which is lower than what we have earlier guided, and our performance has been consistently over 7%. If I look at past few years, any reason why there is a sudden dip, or this is just a transitory thing, and you still believe for the full year we will be able to do 6% EBIT margin?
Yeah. So thank you for this question, because this question might be there in other investors' mind also. See, last year, this pertains to orders which we received last year, and it is a transitional, you can say, and we got few orders last year which were really very low margin. But again, since they were there and efforts required to implement those orders were also not that much, so we took some orders which were low margin, and in this quarter particularly, we have few such orders which brought revenue. So that is the reason. Otherwise, we have become wiser to choose the margins and choose the projects. And I am sure that 5 to 6% of our guidance in project, we will continue to remain in that bracket, overall basis.
Very clear, sir. My third question is on the growth guidance, what we shared in the previous quarter. we said that we want to grow revenue by 30% and profit by 30%. Revenue, we are probably ahead of our guidance. But on the profitability side, we are at a significantly lagging versus guidance. How do you see second half of this year? We will be able to make some of these shortfalls of Q1 in Q2, sorry, H1 in H2?
Yeah. So again, a very pertinent question. See, because Q1 was slightly muted because of elections and all those things. If you see, H1 is certainly gives you better and moderated picture. And I have been telling earlier also, we being not a big revenue numbers company. So overall, when we see on a yearly basis, I still have the same guidance which I have been maintaining on profitability and revenue as far as concerned.
Great, sir. Just one last bookkeeping question. Can you give the revenue for all the three segments for this quarter?
Yeah. Just a minute. So you're talking of telecom and project revenue?
No, telecom breakup. NLD, ISP, and IT1.
Okay. So telecom revenue, 159 crore this quarter with year-on-year growth of 8%. ISP revenue, 111 crores. So you might be seeing that there is no growth if we compare with the last year-on-year Q2 of FY24. But there is one transactional one-time event last year. If you remember, G20 was there, and we had a very good amount of revenue from G20 last year. So that is the one reason you might be seeing. Otherwise, also ISP, because of pressure on tariffs, the revenue growth is not translated from the number of subscribers. So you can see this. And IP1 also this year, 64 crores. This is all about the telecom revenue segment.
Very helpful, sir. Any further development on the data center you want to share?
Data center, the progress from our edge data center side, the partner is continuously and making good progress since last quarter when we made agreement and all that. So we are hopeful that by end of this financial year, we should have some data centers, 4 to 5 edge data centers in place.
And what will be the total capacity of this 4 to 5 data centers?
This will be a very small capacity because these are small edge data centers on those out of those 102 edge data centers which we are planning to have pan India. And next year you should have better numbers, more numbers. If you see, this can be 0.2 200 kilowatts kind of.
Okay. So 200 kilowatt in the total, all 102 put together.
No. One edge data center, 200 kilowatt, one each data center.
Okay. So each will be 200 kilowatt and into 102. That will be the total.
Yes. But this will come up over a period of time. Yes.
And how many years will be over a period of time?
It should be maybe starting now, it should take 1.5 to 2 years to completely roll out the complete 102 numbers.
Sorry, sir, I did not get what is the time frame?
So starting now, it should be 1.5 to 2 years.
18 months. Okay, 18 to 24 months, all the 102 should be up and running.
Yes.
That's clear. Thanks, Sanjay sir, for answering all those questions so patiently, and best of luck for the coming.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Harshit Nagpal from Yes Securities. Please go ahead.
Good morning, sir. Am I audible?
Yes, sir.
Yeah. So, first question on if you could give the breakup for railways and non-railways for the order book that we have. And the second one on, you guided around 3,300 crores of revenue. So, you're maintaining that, or do we think we can do better considering the quarter performance was slightly better than 30%?
So your first question, we have railway project order book around 14 to 15% of the total, and remaining is of course non-railway, including telecom projects business also. Second question, I just immediately preceding told that we are maintaining the same because this quarter is somewhat has made up for the lesser number in the previous quarter. So I am not intending to change any growth guidance.
Right. And sir, one more thing, the expenses on projects this quarter were up by 121% year on year. Is there's something unusual there, or it's just that because the top line has also grown, that's why the expenses are there?
No, as I told you, that in the preceding question, investor's question also, that there was one or two projects which were low margin, means more expensive. So that will certainly reflect in more expenses. In this quarter, we have executed few projects which were low margin, very low margin, and which were actually orders were received last year. And now we are more careful in choosing low margin projects and the type of projects also.
Right. Thank you, sir. Thank you so much.
Yeah. Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Vishal Periwala from Antique Stock Broking. Please go ahead.
Yes, sir. Thanks for the opportunity. And just a couple of clarification. In a revenue side, on a project revenue side, can you also give a breakup between Indian Railway revenue and others?
Yes. So this quarter we have done 104 crore from Indian Railways and 402 crores from other than Railways.
Right, sir. Right. And then, sir, is there a margin between these two segments varies significantly, or one can take, let's say, 4-5% kind of margin?
Railway projects certainly slightly better margin in comparison to non-railway, but recently we have started taking project business through tenders also. So margins are pressure in railway business also. In future will certainly impact our margins in railway business to a certain extent, because the project business through tenders, earlier we were having a nomination tender work which were under execution. So, but we will attend again. I'll impress upon the same thing, that 5 to 6% is our guidance, and that we will continue.
Right, sir. Right. And then just you did mention the order book breakup between railway and non-railway. I just missed on that number. What percentage is railway in this? 5,200.
Railway is exactly precise. To be precise, it is 14.37%.
Okay, 14.
Total order.
Okay.
14.37. Yeah.
Right.
It is 1,189 crores.
Okay. And then within this order book, is it like the pie from non-railway side, it's increasing, or probably we are getting more orders, or you are seeing equal sort of opportunity in the railway side also?
See, railway is one of the sectors, one of the segment.
So
we are now, yeah. So it is a certainly smaller one. Therefore, it is very natural that we get more orders from non-railway.
Okay. Got it, sir. And in the P&L, if you look at, we have this exceptional loss of 14 odd crore. Can you highlight like from which segment it is coming and pertaining what, sir?
This is ECL only.
ECL.
ECL, yeah. Yeah.
Got it. And maybe one last thing and then come back in the queue. Can you give some color on the Railwire, like how the ARPUs are, any benefit that we are seeing in terms of in general ARPU increase which is there in the sector, any benefit that we are seeing? That's the last thing from me.
So ARPU is, I think we are in the same range, 490 to 500. But the subscribers growth was slightly dwindling. Maybe during election period also there was some pressure, basically impact on our subscriber numbers. Since we are operating majorly in Q2, tier 2 and tier 3 towns, activities certainly get impacted in business also when you are in election. So we have again now gaining momentum, and we are doing innovating everything so that, because see, this is very low entry business. ISP business is very low barrier entry. And we have been raising this question with Department of Telecom also. There are certain people, the ISP agencies, who are actually using some methods which are actually not as per regulatory norms. And they are also, Government of India and TRAI and DOT are also doing their best to stop such things. So they are actually a very big hurdle in ISP growth. But we will not let this go. We will continue to innovate and mix our bouquet of offers, prepare in such a way so that subscribers will stay with us and grow also.
Right, sir. Right. And what will be the number for us at the end of this quarter?
5.69 lakhs currently.
Okay.
So we have grown from 5.65 lakhs in the Q1.
Got it. Sure, sir. I'll thanks for this and I'll come back in the queue.
Right.
Thank you. The next follow-up question is from the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Thanks, sir, again taking my question. Couple of questions again on the data center side of the business. You said that each of these data centers will be 200 kilowatt and 102 total data centers. What is the commercial agreement between us and Techno Electric, the partner who we have?
Your voice was cracking. Slightly, can you repeat?
Okay. I was interested in understanding what is the economics between us and the partner in the data center business?
I would really not be able to share this because this is something, the specifics of percentage share with any particular agreement may not be good to talk in such a forum.
No, I was not looking at the percentage, but what is the total revenue opportunity from all these 102 data centers? What is the total market size? What could be the growth beyond this 102? If you could share those details, even that will be very helpful.
I think I would like to make some data collection for answering your questions. Maybe may not be in position right now, but yes, we have worked out and we have lined up our marketing teams to explore the opportunities as well as our data center partners also. But certainly it is, I think last time also it was somewhere around 80 to 100 crore business in the longer run. But right now it won't be fair for me without really getting into the numbers and come again.
Got it. Just on the larger macro data center, we have 3 of them. What is the capacity utilization there, and are we planning any addition? I know that we added one last year. Any more plan on the macro data centers?
So Noida data center, which we are planning, we have closed our discussions with the potential partners, and we are coming out again with the RFP EOI. Last time that RFP could not succeed because there were some new potential partners having some apprehensions. So we have now closed those apprehensions, and we are shortly coming out with the RFP again for Noida 1.
Okay.
And yeah, so earlier we were planning that 30 megawatt data center will come in one go. Now we have decided to begin with 10 megawatt, and then maybe we can scale up. So that is how we are. RFP is likely to come very soon.
Got it. When should we close this one, Noida one?
Sorry?
When should this be over in terms of tendering and actually the revenue recognition happen?
During this current quarter, we should be closing it.
As a current quarter, it is. Got it. Great, sir. Great. Thanks again for taking all those questions.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Dhvani from Investec. Please go ahead.
Hello. Yeah, hi. Thank you for giving me this opportunity. Just wanted, yes, could you give us some color on the margins that are expected?
Sorry to interrupt, Ms. Dhwani. You were not audible. I would request you to please repeat your question.
Hi, am I audible now?
Yes, ma'am. Please go ahead.
Yeah. Thank you for giving me this opportunity. Just wanted some color. Could you tell us what the margins would look like?
Your voice is...
We are not able to hear you. I would request you to rejoin the queue, please. Thank you. The next question is from the line of Viraj from Jupiter Financial. Please go ahead.
Yeah, thank you for the opportunity and congratulations on outstanding numbers. Sir, my question is related to the project expenses. This has gone up this quarter. What is the reason for that?
This is basically corresponding business expenditure to the project business, and there was some low margin business in this quarter which brought revenue. So certainly, this is a repeat answer I'm again repeating because of low margin business getting included in the revenue numbers. So that is corresponding expenditure. It's nothing special. Nothing different.
And so it's fair to assume that your margins from the next quarter will be better?
See, our project business portfolio brings low margin business as well as good margin business. So wherever in a quarter there is a low margin business getting converted into revenue, it is seen in a quarter as a more expenditure and a bit going down. But if you see on an overall basis over some longer period, longer duration, say FY full financial year, then you will find that our margins will be some between 5 to 6% only. So that is how our product business portfolio is about. So yes, if in some quarter some low margin business is bringing the revenue, is getting converted into revenue, it will be seen as a more expenditure and low margin and all that. This is one off. Therefore, it will be quarterly. You may see some variations.
Okay. And sir, my next question is, so what will be your revenue guidance for this year would be? And will you maintain 10% net margins, which we have been maintaining so far?
I think it was somewhere around between 9 to 10%.
Yeah, 9.5%, 9.5%.
Yeah. So we should be there only, 9 to 10% only.
And what would be the revenue guidance, sir, this year would be? FY25?
30% growth guidance we maintain.
Year to year, is it?
Yeah.
And any update on Kavach, sir?
I think I have already given a detailed discussion on this. Maybe you were not there in the...
Yes, I joined the call late. Sorry for that.
So Kavach, we have not yet started participating because our partner's product was not yet ready. It was not yet approved. So we didn't want to jump in the queue and we want to patiently watch the situation and then only bid. Otherwise, we might stuck in the project, and rather than bringing real profit, it might put in some trouble. So that's why we are really cautious, but we are taking very rational decisions in the interest of the company. There are more tenders which are due for bidding this month in November, and maybe in December also few more, and we are deciding on participating in those tenders.
So what would be an opportunity? So what would be an opportunity size there in Kavach?
So opportunity size is, if you talk of now, it is close to 1,000 crore. Tenders would be coming in next 5 to 6 months.
Okay.
Yeah.
Thank you and all the best, sir.
Thank you.
Thank you.
Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Nitin Padmanabhan from Investec. Please go ahead.
Yeah, hi. Thank you for the opportunity. I wanted to check from the data center business perspective, in terms of tenancies on the edge and what you're trying to build overall across those 118, 120 data centers you think over the next 18 to 24 months, where will the tenancies come from? Is it largely be driven by government, or will that be a significant driver, or will it be will private also be a larger chunk? How are you thinking about it? And relatively, when you look at government versus private, how are margin profiles relatively?
See, in data center segment, when you talk of edge data centers, so it is going to be a mix. Certainly, government is going to be there, but private players also we are in discussion with, and because of some OTT players and all those video games and these things, we are in discussion with them. So it is going to be a mix. As far as margins are concerned, margins certainly will remain in the 8 to 10% only for us.
Mr. Nitin,
Okay,
does that
so
answer your question?
yeah, so the data center margins will be in the range of 8 to 10% overall, is what you're saying broadly.
That is what, yes.
Got it. That's very helpful. And I think revenue potential you mentioned as 80 to 100 crores over once everything is set, right, over a period of time, is the revenue potential. Perfect. Thanks a ton and all the way best.
Thank you. The next follow-up question is from the line of Vishal Periwal from Antique Stock Broking. Please go ahead.
Yes, sir. Just a couple of follow-up. In terms of data centers, the Noida one is something that we are doing on our own, and the edge is with the JV partner. Is that right understanding?
No. So Noida also we are looking for a partner who will invest, and then we will manage those data centers. That is how it is. Similar to edge data centers. It is almost similar.
Okay. But the partner-wise, it will be different from the one which you have with edge.
Yes. We are yet to select. That size is and scale is bigger. So there were some apprehensions from the potential investors. So now we have corrected our EO RFP, and then it will come out shortly.
Got it. And then in terms of the existing the data centers that we have, what is the quarterly basis revenue profile will be?
So this quarter we have 27 crores from DC business, data center business. If you compare to the last year, it was 12 crore, and if you compare to the last quarter, it is 23 crore.
Okay. Okay. And just as a reminder, what is the size of the existing one that we have? In terms of KW or the
megawatts.
Megawatts, yeah.
So it is around 2.5 megawatts. 2 megawatts.
Okay. Okay. Right. And then, sir, any further development on the tower business side? Anything that is happening, or probably that can happen only post Kavach?
What is your question? Sorry.
Yeah. So on the tower side, earlier there was a plan to put up a capex. So probably ministry will be putting up a capex, and we will have some bit of revenue share. Yeah.
No, actually, you are, I think, talking about LTE. So
LTE,
that
yes.
LTE tender is still not. It is still basically it is due in December, and we don't know whether it will be again postponed. But tower infrastructure is being created by railways, and we have bagged few orders for construction of those towers in South Central railways also. But I wouldn't like to comment right now because things are, I think, getting still finalized in the ministry on this.
Okay. Okay. Sure, sir. And then on this cash flow front, I think in this quarter we are seeing a bit of, receivables have been a little bit on the higher side, and operating cash flow is also a little bit negative. So any particular segment from where it is flowing, or anything that you like to give some color on this one?
I think because of this Lok Sabha elections and all that, so it takes some more time in election year because budgets are passed later on. So because of that, maybe some that may be the reason. Otherwise, there's nothing to worry about it.
Sure, sir. Sure. Yeah, I think maybe one last thing. Okay. In terms of coverage, though I think you have clarified a lot of data points. Though I think, sir, we keep on hearing in the media government plan to roll out, but in terms of tendering opportunity, not a similar thing probably we could see. Even when you mentioned for the next 5 to 6 months, 1,000 odd crore tenders will be there. So tendering will pick up probably in the next year, or they are still working on it? Any industry, from industry specific point, can you share something? What is the status?
Actually, some new OEMs are also, like our partner is also, their product is not yet approved. So maybe we can't comment why railway is not coming all at once, but certainly they are preparing. All individual railway units are likely to come with tenders.
Okay. And as of now, these tendering, which we are seeing, that is largely if one break up coverage into multiple parts. So this is for the between the loco and then at the station. That's what the ordering is happening. LTE is still not yet getting bidded. Is that fair understanding?
Yes.
Okay. Sure, sir. I think that's all from my side, and I will come back in the queue.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Harshit Nagpal from Yes Securities. Please go ahead.
Yes, sir. Just one more question on the order book. If you could give the breakup for how much is the tender and how much is government nomination as of the current order book?
So, out of this, if we talk of nomination is around 1,250 crore and tenders is around 4,000 crores.
Right. Also, sir, the total CapEx that we are planning on, we are guided some 296 crores last year. Is it the number same or has it changed?
Yeah,
For this?
it is same.
Okay. Thank you, sir.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. A reminder to all the participants, you may press star and 1 to ask the question. As there are no further questions, with this, we would now like to conclude the call. On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may now disconnect.